What's going on, people? It's GBP baby. Welcome to another backtesting video. It's currently 11 minutes past 3 a.m. on Monday the 26th of June. This video is, as I promised, a review at the previous week on Euro USD. We're going to look at every possible entry there would have been for trade executions. Hopefully this will come as good use to a lot of people. I know that a lot of focus in the trading community is on where and how trade executions can be conducted, so we're going to be using the 5-minute as per usual, and depending on how much we get through, we can also look at another pair. I'm thinking Aussie dollar, but we'll cross that bridge when we come to it. So we got Monday trading here, Tuesday, Wednesday, Thursday, Friday. I'm going to go straight to Tuesday because Mondays we don't trade, but first I'm going to mark out the Sunday opening because that's going to be important for us to have as a reference when looking at potential entries and trades. But I hope everybody's good. I hope everybody's gone and watched my my weekly review that I posted on Sunday for this week. And to be honest, I am looking forward to this current trading week. I'm expecting a lot of interesting price action. So this is going to be the Sunday opening. It's going to be in red and dotted, and I'm also going to mark out the sessions. I forgot to actually do that earlier, so I'm going to quickly do that and I'll be right back. Right, so now we have our ranges implemented. Yellow is the London kill zone. I'll just make that clear. Well, orange even is the London kill zone, and then we have the New York kill zone, which is here, and that's the blue. And then finally we have London close in Asia. Asian range, purple. Cool. So we're gonna start on Tuesday, and yeah, we'll get straight into it. So we're looking for entries mainly for trade executions, but we're also gonna look at price action in general because this week was quite interesting, I'd say. Please do excuse my voice. I have hay fever. It's been bugging me for like the past 2 days now, so that's why I sound so blocked up. So the Asian range here, we have the high and low, and we can use that to refer as a reference. So we open, we trade down, manipulation, then we trade higher, then we have an expansion, then we drop down and trade back into this bullish order block, and then we trade higher. So this fall down, this is, I guess you could argue that this is manipulation, because although we traded down into this order block, you see this fall here is like a secondary fall within the London kill zone range, and because of that our entry would be better off here, because I can imagine if we were to trade before the London kill zone, this could throw a lot of people off. So it's important to be trading within the kill zones themselves. So I'm going to look at this as an entry, and I'm going to draw out everything that's going on. So first I'm going to mark out this bullish order block, then we trade to here, and I can just put bullish OB. And remember guys, if you join the Discord, all the screenshots from these are available there, and they're just useful to have so that you can refer to price action. And it's important to see how price works, how price trades, especially on weeks like last week's. I'm also going to mark out the 50% level, and you'll see how price respected that quite nicely. There we go. So there's also a really small fair value gap there, and we have a break in market structure. I am going to, if you've watched my previous backtesting videos, you'll know that this is what I do anyway. So I am going to be pretty much breaking everything down to this extent, as in noting the break-in market structures, any breakers, and anything I see happening in general, such as this fair value gap being created where this order block is and us finding support there and then traded higher and taking out this relative equal high, this short-term swing high here. Little things like that. So this is why I like to call it inverted order block, because every one of ICT's PD arrays, that's a negative term, bullish actually, every one of ICT's PD arrays are what's the word? Irreversible. Yeah, but what I'm showing here is that we traded here. It's a bearish order block. Once we traded through it and closed above it here, you can see how we find support on it, respect to the 50% level, and use that to push higher. That's basically what I'm highlighting there, in combination with this fair value gap. And I am going to try and stick to a theme, as in fair value gaps are blue, and then we'll make this order block a different color actually, just to make a little bit, make it a little bit more recognizable. And then we also want to mark out the 50% level. And look how we trade right to it, and then we push higher into this swing high. This is all in the Asian range, by the way. It's buy side liquidity. Now you'll see that we didn't trade into this high during Asia, so we can anticipate, when we see things like this, we can anticipate this high to get traded to. It gets traded to as London starts. So once we've taken out that buy side liquidity resting up here, I guess we're looking for sell side, and it creates that here and here. So it's a short term liquidity which can help us understand this move down into that. So I'm going to mark that out once we get there. But it's important to try and recognize where the break-in structure here is. And I guess once we start trading down below here, that's where we have the break-in market structure for the move lower. Then we refer back to this order block. Excuse me. It is very late, guys, but I'm as you know already, if you've been watching my videos, I am most definitely a night owl, for sure. So what I'm going to do now is I'm going to mark out the 50% level of this range. And you can see we break lower, leaving this open, a bullish turn, bearish fair value gap. We anticipate that being left open if we are to move lower, and that's what we see. Where's our break in market structure? We look for the swing low, which would be here. And once we close below that, so this candle, we now have a break in market structure. So for the fair value gap to be created on top of that, you can't make this up, like, as in, that's nice price action to see. Break of structure. Then we run down. Where's our breaker structure here? Over here. We also have a breaker, which is what we trade back to during London, and that's going to be our first entry for this week. I was going to make this video much more shorter and simple in terms of just looking for entries, but to be honest, backtesting is important anyway, so I might as well just do it properly and put the work in, because I'm here now. So I'm going to mark out this swing high as a breaker. If you're just here for entries, well, I guess you're going to be here for a long time, because it's not going to be as simple as that. That's just marking out the entries. I want to completely and fully break down price action and have a nice overview of how price is traded. Look how we respect that fair value gap, and we also and look how we leave this fair value gap open. We also have a breaking structure here. I do like this as a inverted order block because we trade to the 50% and then turn around. So this is a bullish turn, bearish order block. Bearish turn, bullish even. And then I'm going to put our entry in right here. This is where I'd like to go long. Where would I, and I'm also going to put stop losses in this one. So where would my stop loss be? If I was, let's say we were waiting in the London session and we wanted price to come down, where would my stop loss be if I was entering in this breaker? It'll be below, to be honest, I could put, it is crazy, but I could put it below this low because the fair value gap is here, which means that price shouldn't trade below this low. However, you can see that we get pretty close to that, and realistically, I don't think I'm not confident yet to be putting my stop loss that close, to be honest. So I'm going to say that I'm going to put it at the bottom of this swing low. So I'm going to mark this swing low out and put it as, and make it red, and I'll type make it red, and I'll call it stop loss. And then we'll make that dashed, and we'll make the line also red. You know what, we'll make it blue, that blue. Cool. And then where would we exit? Well, we have some highs here, so there's buy side liquidity resting above that, so we can let go of half our stop there. And then we have the Sunday opening and also liquidity, lots of buy side liquidity resting there. So before we get into all that, I do want to talk about how we trade into this order block and then higher into the buy side liquidity, the buy side of the Asian range. And then we trade back into this order block. Push it to the buy side, and we're creating relative equal highs, and then we turn around. Where is our break in market structure here? I guess once we trade below here, once we close below the swing low, so once this closes here, then we can expect that these lows will get traded to. And the failure swing up here as well. So I'm going to circle that as a failure swing. Just this candle here, because you see how this fails to trade up to that high? And I'll just make a note saying failure swing. To be honest, this is the first time I've used a circle. It doesn't seem very useful, does it? Let's get rid of that. I'll just mark out the break in market structure here. And also we anticipate a gap to be left open as a breakaway. And that's what we see right here. So we can make that purple, we'll call that a breakaway gap. There's a lot of same-ish colors going on around here. I'm gonna make that black. And put bullish OP. This is a break and a breakaway gap because we don't trade to it and it stays open. We anticipate that if we are to move higher. So once we start trading back higher, I guess once we take out this breakaway gap, as soon as price is dipping down there, you can recognize that we trade to the 50% of this. It's little things like this I like to bring my attention to, because it does fascinate me how we trade. You know, I'm assuming price is referring to this breakaway gap as a certain level, as in, how do I explain this? I'm not making much sense right now. So you see how this breakaway gap is at the 50% level of this wick. I can see this as offering some kind of discount, and then you can see we push very aggressively higher. We don't even, like, we close at the high, and then we break through this high here, buy side liquidity, and that's where I'm going to let off half of my position. So this candle would be me letting off half my position, and I'd also see this as a measure. I think this is a measuring gap maybe, because we're halfway up the move and we anticipate that. Also, this fair value gap is getting created in this bearish order block, and we find support in that. So I'm going to mark all this out, make it much more clear. But first I want to note that this is where my first partial would get taken. Make that orange, and then where at this point, by the time we get up here, my stop loss would definitely get moved to, say, well, I don't anticipate it trading back down to here. This should now act as support, so my stop loss can be moved to there, but I'm not going to really be doing that. So let's mark out this as a bullish turn bearish order block, bearish turn bullish order block. You see we find support, 50% level, standard, and then look what happens. We trade very aggressively and use it as a springboard in order for us to push higher. 307. And what are we trading into exactly? Well, there's relative equal highs up here and a fair value gap. So I'm going to just type that. It's pretty much on this, and there's this beautiful fair value gap, and I did that. If you were watching my videos last week, you'll know that I did have this 15-minute target marked out, and you see how price is trading back and forth through this. This is what you call a balanced price range until we leave it. Have I already it's possible that I might have already annotated this chart. Yes, I actually have. However, I haven't done it on video yet, but I have annotated this chart before. Interesting. I was going to say it looks very similar. Balanced price range. Put at the top. Then we leave it, and you can see how we find support in this order block here consistently too. Respects the 50% level. You can look at how the candles close at that. Craziness, isn't it? You can't make this up. And we keep breaking structure until we start pushing lower. Yeah, I have definitely done this already. So these are both fair value gaps for entry. That's where I'd get out of my position. And I like the idea of selling in this fair value gap here. And looking at these lows as a target. So this sell side liquidity resting right here. Sell side. One thing I did note, so I have already analyzed this. If you're in the Discord, you'll see it. But I made a note here saying how this shows the importance of time, because As price takes out this range, which was created between the London session and New York kill zone, it offers between that range. There's an entry here, but because which out of context might be seen as a normal, ICT entry, fair value gap, traded into it, and we trade away from it. However, because it's not in the kill zone, it gets taken out, and then we trade through it. So I think it's interesting to pay attention to that to pay attention to this range being created. I am going to look at tomorrow. I am going to start noting this range that gets created between the end of London and the start of a New York kill zone, because it seems that it's clearly referring to these levels, as in you see a dip down here into sell side liquidity, and then we run for the buy side. Very shortly after, and that could be a trade in itself, really. If this is like probable to start, if this is probable, then that could be a trade in itself. But I'm not going to rely too heavily on that. So we have a breaker here, and you can see that we trade to that there and the fair value gap. So there's another entry for a sell here. How long have we been going? 21 minutes. Wow. I do hope this is insightful, guys. But yeah, you guys should definitely join the Discord, because again, I've pretty much analyzed this already. So after we take out this low, you can see we took out short-term high here. And then for the rest of the London close, we trade lower into this sell side until we have a reversal, which is here. I'm not very strong when it comes to trading London close, but that is definitely a time that I want to start working on. I'm going to put my exit here. Why? Because it's below these lows here. So if I was selling up here, I'd expect price to want to reach for this swing low here, offering sell side liquidity. And then from then on, we pretty much consolidate into Asia. So I'm going to go straight onto Tuesday. I did kind of rush the end of that purely because, like I said, I've done it. If you go look at the Discord, it's all there. But let's look at Tuesday. Wednesday, sorry, where we had very bullish price action. Very bullish indeed. So first thing to do, mark out the high of Asia and the low of Asia. Beautiful relative equal lows being created here. You can see we consolidate, dip down, take out sell side. So what can we expect? Buy side to be taken, and that's what we get. So that's an entry in itself. This is a turtle soup swing low, take out buy sell side liquidity, and then we move higher into the buy side liquidity. We're also trading down into this move here. So we got a swing high. I guess you could argue that this is a breaker here. Swing high, a mitigation block. We've got a swing low, a higher low, and then we move higher. Low, higher low, and then higher. So that means that this would be these two candles should make the breaker, and that's what we trade to. Mitigation block. And then we'd also be anticipating that price will stay above the 50% level off that rate, off the range of the mitigation block. Excuse me. Look at that. That kind of respect is what I like to see. So we keep finding support. So these are all potential entries. And also this trades to the 50% level of this wick, which happens to be that. I'm going to make that a bit more clear. Consequent encroachment. And then look at how these order blocks stack. So we have an order block there, then we have another order block here. And we have a breaker here. Or, wait. Yeah. See, this is where the wicks do the damage, because the breaker is here. Swing high, swing low, swing low, low, higher, low, and the swing high in between it. We trade into that here. But in all fairness, yeah, I think that's another mitigation block. It is interesting that we trade past the 50% level though. So now I'm starting to wonder whether it's this range completely. I'm not going to get too much into that. So where's our target when we're buying here? I mean, we got sell side here, so we can exit some of our position just above that high, that buy side liquidity. And then you can see we're very consolidated until London close, where we expand aggressively higher through the Sunday opening, find support, and then trade higher for the rest of the day. But this is all very much just pure consolidation, back forth, and again, this is what you call a balanced price range from here to here. This is a balanced price range now, so we once we see consolidation for this long as well, we can anticipate price to leave that range, sorry. And if it is to come back to it, then we'd want to see some kind of, resistance at it, although we don't exactly see that. We see it hit the 50% level and then drop off quite precipitously on the Friday. So we'll cross that bridge when we come to it. But we're reaching half an hour now, so I am going to finish this video here. And then I'll continue it in the next episode of the backtesting. Thanks for watching, guys, and I'll see you in the next one. Peace.